And welcome back to the Financially Simple Experience. Today, we're going to dive headlong into your lifetime savings results. And we're going to talk about why this number matters so much. Now, let me tell you right off the bat. Today's episode can change the way you look at finance. It is this powerful. I remember when I first discovered this particular calculation, and the moment I did, it changed the way I looked at money. It was amazing. The Social Security Administration has an interesting website. On their website, they have a lot of data for our benefit. There's a study from 2015 called the Education and Lifetime Earnings in the United States study. And the SSA, Social Security Administration, has diluted that study down to a bar graph graphic on their website. We're going to put a copy of the bar graph onto our blog at Financially Simple. And by the way, while you're at the blog, please sign up for our newsletter. I'm telling you, our team is rocking it out. We're getting a ton of subscribers to the newsletter. You don't want to miss it. Some of the best writings that we do on a consistent basis goes in the newsletter, along with offerings and other upcoming events. We've got speaking events, various types of events happening that we're talking about in the newsletter. Again, back to the Social Security Administration. So on the Social Security Administration's website, they have the income broken down by college level. So for example, if you're a male and you graduated high school, you could expect roughly to make about $1.5 million. That's the average. If you graduated with a bachelor degree, it goes up to $2.4 million. And if you have a graduate degree or a postgraduate degree, it goes roughly to $3 million in average earnings over your lifetime. That's amazing to me. So if we think about this, we know that we can make a certain amount of money over our lifetime. And that's, obviously there are those outliers. We get it. I get that there are people who are going to make hundreds of millions of dollars. And I get that, there are people who are going to make millions of dollars a year, et cetera, et cetera. But this is the rough data points on an average level. So how much money do you make now? And how many years do you have left to work? And if you multiply that, what is your number? So let's say that I make $100,000 a year, and let's say I have 20 years left to work. That means I could potentially make $2 million plus a little bit of inflation over the remainder of my life. And let's say that I've made $1 million for the previous 15, 16, 20 years of my life. So it's possible that I can make $3 million in my life, in my example. Maybe you're making $1 million a year. It's okay. In our last episode, we learned how to calculate the annual savings rate. Let me ask you, how'd you fare? Are you saving more than 20% of your gross income into income-producing assets? Are you saving roughly 20% or more of your gross income into income-producing assets? See, shortly after I recorded the last episode, I met with a friend and we spoke about the content. She said, "What have you been doing?" I said, "Well, I just recorded a podcast." "Really? What was it about?" And I started talking about the breakdown of the annual income savings rate. And she said, "Well, Justin, I'm saving greater than 20% because I'm putting a ton of money to the principal of my business debt. And so therefore I don't need to save any extra money outside of that. I'm actually building my net worth up." And she is right. She is building her net worth up if the business can sell. And so I leaned back in my chair and I left her a retort. And she became speechless. I asked, "Are you really playing roulette with your long-term future by using an asset which has a statistical likelihood of 15% or less to move from an illiquid asset to a liquid asset? Wouldn't you rather use a more predictable asset to buffer against the volatility of your family-owned business?" You're like, "Justin, do you really talk that way?" Yeah, believe it or not, I do. I'm kind of boring that way. Basically, what I was saying is, look, girl, you're relying on this asset that has a 15% likelihood that's not going to sell anyways. Wouldn't you rather use something more predictable to position yourself for your financial success? She leaned back and didn't say a word. And then I explained the concept I'm giving you today, the lifetime savings result. And I literally saw an aha moment. The light bulb went off. Ding, went off. And she said out loud, and I quote, "It really doesn't matter how much money I make. It's how much I keep." How many times have we heard that in our lifetime? Well, today, I'm going to bring this home. As my mom would say, the chickens are coming home to roost, son. As I reminded you that I recently read The Dream Manager, and Matthew Kelly made this statement. He said, "Those who don't manage their money well are no better off than those who don't have money to manage." So let's see how we're faring on our ability to manage our money. There are a few ways to receive or discover your lifetime income, the amount of money you've made over your life. Now, you could be like me. You could be a nerd. And you could have all of your tax returns saved from the very first tax return you ever filed to present. Yes, that's me. As we were cleaning out some boxes in our house shortly after our move a couple of years ago to our new farmhouse, I showed Emily and the kids, here are our tax returns. And they were in numeric order from the first year I filed taxes all the way to the present at that point and even today. And it's all on paper. Yes, I'm still an old school guy, but I thought it'd be interesting one day in the future to be able to show my grandkids, here's where granddaddy and grandmama started off in life, and here's kind of our income flow. The reason why that came to mind is because I remember seeing my dad's first paycheck. My dad's very first paycheck, and I was amazed at how much inflation had caused math to move around. So I just thought it'd be interesting. So yes, I have all my tax returns. Maybe you don't have all your tax returns like me, but yet you've worked for less than 10 years. If you work for less than 10 years, then you can get an income transcript from the Internal Revenue Service. All you got to do is ask. If you go to their website, you can ask them for the transcript, and they'll give that to you. Maybe you've worked for greater than 10 years like myself. 25 years now I've been employed. Actually, greater than that. They're almost 30 years. A while now. You can request your Social Security earnings information straight from the SSA, Social Security Administration. So you can have the Social Security Administration provide you your earnings over your lifetime. Regardless of how you find out your income, whether it's a nerd like me, you get it from the IRS or you get it from the Social Security Administration, what you want to do is come up with the total amount of income that you've been entrusted with in your life. And what we'll often discover is many times it's sand between our fingertips. Because what we're going to do is we're going to take this number, the total amount of money that we've received over our lifetime, and we're going to divide it by our current net worth. So let me give you an example. Let's say your current net worth is $500,000, but yet you've received $2 million in income over your lifetime. That would mean that you have a lifetime annual savings result of 25%. Thus, for every dollar that's gone through your fingers, all you have to show for it is 25% of those dollars. It's like sand through an hourglass, friends. I can remember the first time I calculated this. I don't know why I calculated this, to be honest with you, but I looked at it and I said, I wonder how much money I've made over my lifetime. So I took our tax return and started adding up all the adjusted gross incomes. Boom, 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 boom. Had that number. I said, that's interesting. How much am I worth now today? And we were at that time worth roughly 120% of the income we had received during our lives at that point. And my mind began to wonder, so if I'm only going to make $1 million, $2 million, $3 million, $5 million, $10 million, whatever the number is in income a year, how in the world am I going to build an account up that's large enough to replace my income? And thus, my lifetime savings percentage results calculation. So I began looking at how in the world can I increase the results? Well, there's a few things we can do. We can look at increasing our rate of return. I remember not too long ago, a dear friend said, I want to pay my house off. They had a large sum of money come into. I said, don't do that. Let me actually make a video and show you why it doesn't make sense. So I put a video out on YouTube that spoke about here's why you don't pay your house off. And they didn't, and now their net worth has drastically increased. So you can actually look at where your assets are focused today, and you can go in and adjust the location of your assets to try to gain a greater return on your money. Before we go much further, let's hear from today's sponsor.
Growing a business's value can be a time-consuming process. Rather than trying to explain every step to your team, have Justin Goodbread come to you. With his engaging style and unparalleled training, Justin presents the process to your team while seeking to align the team to your vision. For more information about training and speaking opportunities, visit financiallysimple.com/work.
Another thing we can do to increase our lifetime savings results is we can increase our savings rate. If we're only saving at 10% of our annual income, let's go to 20%. Let's go to 30%. Let's go to 40%. And dare I say, let's go to 50%. I remember not too long ago that I heard an individual say that they give away 90% of the money they make. And I thought, how in the world is that possible? And they do. I know this individual, and I verified it. They were talking. They showed me some data points to some planning, and they literally give away 90% of the income they make. What if you could save 50% of the income you make? There have been years that I have done that. Now, where it gets more income that you make, the more you can save. We know that. Obviously, if you make a less income, there is a certain standard of living that we possess, that a certain level of income that we have to maintain that standard of living. So I get it. Someone who's making $1 million a year is certainly going to be able to save more than someone who's making, let's say, $50,000 a year. So, but we can increase our savings rate. We can increase our frugality. We could look at where our dollars go, maybe not save it. Maybe we could apply it to some debt and so increase our frugality. We could change our lifestyle. I often say that the largest single the determination of the success that we have in terms of saving is our lifestyle choices. Our house, for example, will cause more expenses than anything else in our lifestyle. Our house does. Depending on where we live, the size of the house, the location, the state, the XXXXX, everything moves off of the house itself. So we can make lifestyle choices. Now, I do realize, and I'm not so cold-hearted to realize that life happens sometimes. And just because we don't have the perfect savings rate, just because it's at 25% of the money we've had go through our fingers, that's all we have, it doesn't mean that we're bad. It doesn't mean that we're a failure. Let's use this number to motivate us. Let's use it as a motivator to increase our number, to increase our lifetime savings results. We can. This is actually one of those calculations that I like to track for our clients is, can we increase their lifetime savings results? And if so, by how much? Hey, look, friends, I know life is hard. When we're trying to deal with money and we look back over the last 15, 20, 30, 40 years of our lives, we can feel like a failure. Money's hard. Look, we didn't get taught how to handle money. That's why we're here. Life is hard, but life is good. We are blessed. We have the opportunity to change things and move forward. And yes, it can be frustrating as we learn and make adjustments, but it doesn't have to be. We're going to continue to make our lives at least financially simple. Hey, y'all go out and make it a great day. This tip is for informational purposes only. Please speak with a competent financial advisor regarding your specific needs. Justin Goodbread is a registered investment advisor with Heritage Investors. Visit heritageinvestor.com, financiallysimple.com for additional information.